everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In the last recording we asked, could the Fed finally move the market? I think we can say the answer to that question is a resounding yes. Yield curve is starting to flatten. We'll talk about what that may mean, and perhaps we should create a to-the-moon meme for the U.S. dollar. What's going on there? Let's take a look at the charts. If you're new to the channel, don't forget to drop us a like and subscribe to be notified every time we upload a new update. At the time of this recording, it is very late on Friday evening / Saturday morning, therefore the futures market is closed. But looking at the charts, you can see that the market didn't know quite what to make of the Fed announcement, closing with a doji in Thursday's trade. But boy, today on Friday, the market gave it a big thumbs down as far as the fact that the Fed may be thinking about raising rates coming up in next year, 2022, rather than 2023. I think one interesting thing is what happened at the very end of the trading session today. You can see the futures just tanked in the last 5 minutes of trade. Often when you're on a Friday, you have some position squaring going into the close, meaning that we were down throughout the day, so you might have expected to see a little bit of bounce to the upside as the people that were short closed off some of those, but it looked like the traders wanted to press their bets for a potential downward move on Monday morning. We'll see how that plays out. Long time between now and when the market opened on Monday. So I want to talk about that 420 level. We've been talking about 420 for quite some time. Here's that old zigzag that we've been showing for months and months. And way back on December 8th in our Trade Finders meeting, we showed that with the market moving up towards this 100% level in the C wave of the zigzag that started way back when the wave 4 was labeled in June, that the next target would be 420. So here we are, there's December when we first started talking about it, and we made it, and you can see how strong of a resistance area that has been for the market going back to when it finally touched the actual 420 level, which was on 429. We actually touched that level. So while I'm thinking about it with Trade Finder, if you've been watching these recordings and you haven't attended a Trade Finder meeting, sign up. There's a link in the comments section, or you can go to our website, ewotrader.com, and sign up there. It's free every Tuesday night. We talk about the markets. We look for live trade considerations. It's a lot of fun. We have calls like that. So taking a look at where we could go from here. The wave 5 also has 161.8% fib extension, so there's all kinds of Fibonacci resistance here. So moving to the downside from here, let's take a look at the moving averages, because you can see on the low today, we did close right on the 50-day moving average. So if the futures do hold through Sunday night and we open lower, we're going to be a bit extended from that 10-day moving average. We'll have broken below the 50-day. Perhaps some traders step in, try to allow that to act as support. You can see touching the 50-day moving average recently has added support. It is a good trending indicator, the 50-day moving average, and I don't like this gap down. That likely has to get filled. I do think we move lower, so I think we're likely to go down to 410, and then I don't see why we don't go all the way down to at least 400. It's the previous major fib level 61.8, fills that gap there, and we have the big round number aspect of 400. So I think that's the likely next stop. Taking a look at bond yields, I mentioned in the intro that the yield spread is tightening. So let's take a look at that before we look at the individual yields. You can see here's the 210, and that's a good precursor. You can see the writing there. An inverted yield curve is forecast the past 7 recessions. Well, there's a drop back down in yield. It's not going to be good for banks and financials that need that yield spread in order to make money. Again, they borrow on the short end, lend on the longer end, and the spread in the middle is how they make money. So pulling back. Now, we're a long way from going back down to zero or even thinking about breaking in and going inverted, but a sizable move to the downside is worth noting. So if we take a look at the 10-year, you can see that we had this big spike up. In the last recording, I also mentioned that some really smart bond traders had speculated that in past research, a big spike up in rates followed by a drop in rates indicated potential recession coming. Kind of along the lines of that 210 yield spread. Now there's another side of the argument of people that have been saying, no, what happened was he had this big spike up in rates and that just attracted foreign money, other countries coming in because they're all at negative rates and they were able to get a bit more yield. I think that probably is the reason that we churned here for a bit. We backed off the rates and then churned through this sideways move that we've been talking about for a couple of weeks. But I don't think that's what's causing this drop. I think we have to really think about the fact that there may be a recession looming on the horizon, and it may be worse than just a U.S. recession. I'll show you that in a minute. Now, there's a look at the 10-year. Now, look at what happened with the 30-year. It relabeled. We're now in a wave 3 to the downside on the 30-year. So mortgage rates are going to go lower. Is that going to help support the housing market? Lumber rates have come down, and if the 30-year mortgage rates go down, maybe the housing market can hang in there a little bit longer. You certainly have to speculate that it's a bit overheated at this point in time, but pretty interesting that we have this relabeling to where we have a wave 3 down in the 30-year. Also in the intro, I joked about creating a to the moon meme for the dollar. Look at that. Talk about to the moon. That's about as vertical of a move as you can make. It's not labeled in a 5-wave pattern right now, but that is certainly one heck of an impulse move coming out of this area of consolidation we had after the zigzag pattern that completed to the downside. That's in the last recording as well if you want to take a look at that. So pretty vertical move. Can that hold? Well, we're getting a bit overbought from the 10-day moving average. You can see that the dollar may need to calm down just a bit, close that gap. We'll have to see if it consolidates and lets the 10-day moving average catch up, or if it backs off a little bit. But when we look at the DMI, that's a pretty good setup for the DMI, showing that there's some strength to this move, and it's likely that the dollar is not done going to the upside. It just may be over the short term, needs to catch itself, catch its breath, re-energize for a continued move higher. But it looks like we're going to at least come up here and test that recent high that occurred back at the very end of March, and then we'll see what happens from there. Why is the dollar rocketing with rates going down, etc.? Well, could be some support from the Fed announcement, the fact that there is a rate hike on the horizon. However, rates aren't acting that way, so why is the dollar? Could that mean that there is a global recession looming on the horizon? That's normally when the U.S. dollar does well, when the economy around the world is not doing well, economies around the world aren't doing well, and people run to the U.S. dollar as a safe haven. Are smart traders getting in front of that move? It's an interesting speculation. Time will tell, but certainly something to think about. Now let's look at Bitcoin. And Bitcoin, as we speculated in the last recording, did form a larger triangle. As a reminder, we had this really well-formed symmetrical triangle following the completion of this 161.8% extension in the zigzag pattern to the downside. And we mentioned that if you break out one direction and that turns out to be a false breakout, and then you move the other way, that one can't be a false breakout. There's no such thing as two head fakes or two false breakouts of each direction out of a triangle. What's occurring in that scenario is you're forming a larger triangle. And so there's the larger triangle with Bitcoin. Well, what does that mean? Well, normally a larger triangle means that when the break occurs, it's a bit more volatile and the price movement is larger. So still looks like there's a big break coming in Bitcoin, but with that well-formed symmetrical triangle right at the end of a zigzag completion pattern. We also retrace to the previous four, all absolutely spot on Elliott Wave action here, if you will. It's going to be a pretty decent move out of Bitcoin, but it could be either direction, so fasten your seatbelts. It's going to be interesting to see which way it breaks. Last but not least, taking a look at the VIX. I had sent a note out to our alert subscribers last Friday that this move to the downside here and closing below that area of support at 16 was going to be something to watch for Monday's trade. Is this just a head fake? We closed below there, indicating that maybe we were about to go higher in the market, but no follow-through day. Our subscribers know that if you break a major support resistance level, break out of a triangle, major moving average, something along those lines, you have to have a follow-through, a confirmation day. It didn't happen, so we jumped back to the upside. Volatility is back in the market, and that's sure going to be fun for us option traders. Looking forward to seeing what happens over the next few weeks. But boy, really interesting close to the week. Hope you have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.